Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 22nd of the 2nd to Friday the 25th of the 2nd, 2021. I know this is the weekly review, but we're at a month end, so we're going to look at the month's flows for February first. We're going to start this so we don't waste time. Anyway, if you look at February 21, then the month has just gone. Euro dollar minus 56, which means over the month the FX pair euro dollar lost 56 points or pips. Euro yen plus 154, euro pound minus 180, pound dollar plus 229, pound yen plus 487, dollar yen plus 178. And if you look at the actual flows, then we've got an opposed positive driver in the pound at a pretty substantial plus 896, 896 points. And then we've got front and back door flows, and these opposing negative flows came mainly out of the yen. You can see at minus 819, and then the euro and the dollar were very static over the month. That doesn't mean they didn't move, it just means they've ended up in a neutral position. So we've got the euro as the negative mover at minus 82 and the dollar as the positive rock at plus 5, and that was an activity of plus or minus 901. So you can see that over February then basically what's happened is you've had significant pound strength, significant yen weakness, and euro and the dollar have been holding the ground in the middle. So we'll stop this now and we'll look at the weekly flows. Right, welcome back. Those of you that are awake will realise my first mistake was saying that the week was from Monday the 22nd to Friday the 25th. It's actually from Friday the 26th. Lost a day there somewhere. Anyway, here we go then. So this is Monday the 22nd to Friday the 26th. Right, so euro dollar, this is the flows over the week we've just had, the last trading week of the month of February. So euro dollar minus 42, euro yen plus 96, euro pound plus 24, pound dollar minus 85, pound yen plus 75, dollar yen plus 115. And if you look at the flows, you've got a negative opposed driver in the yen at minus 286. Front and back door flows, the bulk of the positive opposing flows going into the dollar over the week at plus 242, less so into the yen at plus 78, and the pound was the negative rock at minus 34 on activity of plus or minus 320. Right, so if you contrast that with the monthly flows, so over the week we've had a negative opposed driver in the yen. And we've had dollar strength, and over the month, which was the ones we just did previously, you had pound was the opposed driver. So the pound was the opposed driver at plus 896, and the yen was the secondary driver at minus 819. So the yen was still weak, but the pound, the positive end was different. Right, so we're going to stop that there. Look at the daily flows for this week in detail, and then we'll do a little bit of analysis at the end. So stick with it. Right, welcome back. These are the daily flows for the period for the week, Monday the 22nd to Friday the 26th. Right, the thing to notice here is that if you found trading difficult this week, which most people did, is because we had drivers. We had unopposed drivers changing almost daily, pretty much till Friday. So Monday then, the 22nd, the dollar was the negative unopposed driver at minus 115. So no backdoor flows, and the flows were going pretty evenly into the pound plus 48, euro plus 39, yen plus 29. Activity of plus or minus 115. Right, so you had Monday, you had fairly extreme dollar weakness, and then Tuesday we had the pound was acting as the unopposed negative driver. So you had plus 163, so you had no backdoor flows again. Flows mainly going out of the yen at minus 99, next out of the euro at minus 39, and the dollar was minus 25 as the positive rock. Activity of plus or minus 163, slightly higher activity for Tuesday. Wednesday then, we've got the yen acting as the unopposed negative driver this time. So we've had dollar, pound, yen on Wednesday. So that was at minus 280. No backdoor flows yet again. Bulk of the flows going into the pound plus 153. Next into the euro plus 108, and the dollar was the positive rock at plus 19. Activity plus or minus 280. So we've got increasing activity each day so far. Thursday, the pound. Back to the pound being the negative unopposed driver at minus 307. No backdoor flows. Flows going pretty evenly into the dollar and the euro, but the dollar took it at plus 156, euro plus 150, and the yen was pretty static at plus 1 as the positive rock. Activity of plus or minus 307. So rising activity Monday to Thursday. Friday, final day of the week. This is the first time we've got more balanced flows, even though it didn't seem like it on Friday. We've got the dollar being the positive opposed driver at plus 219. Front and back door flows this time, mainly coming out of the euro at minus 178, next out of the pound at 108, and the yen was the positive rock at plus 67. Slightly lower activity for Friday, plus or minus 286. Now, just a quick recap then. Hang on. So over the month we had the pound driving. So we had pound strength over the whole of February, plus 896. Yen weakness, equivalent yen weakness at 819. Over the week we had dollar strength and we had yen weakness. The yen was driving over the week at minus 286, and the dollar was the secondary driver, positive at plus 242. And then over the week we've had these wild swings of individual days where literally we've had these unopposed drivers switching on a daily basis. Monday was the dollar, Tuesday was the pound, Wednesday was the yen, and back to the pound for Thursday. And notice the drivers Monday to Thursday were all negative, and it's not until we get to Friday that we have a positive driver on the dollar. Now let's just make some room. So basically, what was going on this week? Well, the underlying story basically was we had this situation where we were getting a disconnect between the USD, the United States dollar, and its yields. So you've got this like what's it called, scheme which in America, which is subsidizing the furlough scheme and all the rest of it, and then you've got this situation where basically you've got falling prices of the 10-year, which is rising yields, and the dollar was pretty soft. And if you look at the dollar index for where we are at the moment, so this is the dollar index, you've got, it's basically sort of around here. These were the two double lows that we were talking about during the week. That's the absolute recent low, and we're up here now. So the dollar has had a significant bounce. Gold on the other hand has basically really struggled. and that is off the back of, as we said, it's very difficult to buy gold unless something peculiar is happening when you've got a persistent rise in the dollar. So the gold's basically come off. Oil, what have we got? We've got this sort of situation where it came off and it's come off a bit now. It's come off a bit the highs, but it's still pretty strong. Oil is pretty strong. And then you've got the equities. You've got Wall Street and the S&P. They're sort of looking, they're looking like this sort of, and then you've got the tech, which is underperforming. So the tech is down here. So you've got Wall Street and the S&P sort of have taken a hit over the week, but they're sort of mid, and the tech has been really hammered off back down to its sort of equivalent support from a while ago. Now US 10-year, which is all the fuss has been made of really, they've basically bounced now a little bit, but basically they're still pretty low. So we've got strong yields, and this is the price of the US 10-year. So that's what's been happening there. And just make a little bit of room again. Copper, and we did say copper was very precarious. If you remember what's happening with copper, right? So copper. So basically it came up, it dirged, then it caught up with equities, then it had 1, 2, 3, 4, 5 pumps, and it came back, where are we, it's now come back to the top of the second pump. So it's sold off significantly, right? But unfortunately, we weren't selling it off. But that's another story. But anyway, so what have we got then? We've got in terms of flows, and if we start with that. You've probably got the impression that the dollar has really been on a tear on the up, but as you can see from the monthly flows, the dollar is now +5 for the month. So basically, all it's done is retraced its position. It's now pretty much back at base camp. So the USD has basically formed a neutral position. It's +5 for the month. So and then looking at that situation in general, you've got equities who finally didn't like the idea of rising yields and was sold off. Gold certainly has had a difficult time, not only initially because equities were on the up and people were searching for yields, so gold didn't get the benefit of the falling dollar, but it certainly got the negative benefit of the rising dollar, and now we've got equities off. So it'll be interesting to see what happens with gold next week. Oil is still pumped and has come off a little bit, and copper is basically was outperforming, and then it resisted for a while the rise in equities, and then really got going, and then it resisted the drop in equities, and then it's really sold off. So it'd be interesting to see what happens on Monday, but that's what we're seeing. Excuse me. Commodity currencies have come off, as you'd expect, in the transmissions. AUD, NZD. NZD was really strong, and we were selling it all the while it was strong, and then we stopped selling it when it became weak, which is typical, but there you go. That's what we did. Looking ahead then, the next video we're going to tie in these flows, which I've rubbed off, with the data cycles for that period, so from Monday the 22nd to Friday the 26th. So this sister video will be out shortly, same time today, later today. So that's worth looking, because it will fill in all the gaps on what we're talking about, and we can do some further analysis of what's going on. And then obviously we're going to try and get a handle on what's going to happen going forward. So hope that was useful. See you for the data cycle video shortly. Thank you very much.